if you look at 5 or 10 years ago, most of the students going abroad used to be engineers. We realized that manga art or anime is a $50 billion industry.
If I have a 10 lakh loan that I need, what's the value of collateral or security that I need to give?
When it comes to Indian banks, they still look at your parents' repaying ability rather than the students' repaying ability.
Basically, the ability to repay. How does an education loan get granted? Parents' airfare, right? When they go to visit?
No, I'm not aware of any loan which covers that.
But the most important part is it's not free money. At what point of time does a student or a parent actually should start considering about an education loan? Hello everyone and welcome to Mind Your Karza with One Finance, a show where we help you understand and improve your relationship with debt products like credit cards, home loans and much more. On today's episode, we are talking about education loans. My guest, Gautam Gadgil, founder and CEO Enrizon. Gautam, welcome to the show. Thank you so much for doing this for our audience.
Thanks so much, Anupam. Delighted to be here.
So, before we go into the details of an education loan, can you just help us understand why this market has really grown over the last four or 5 years since you do counseling as well as helping on the funding? Just a broad overview about what's been happening, how kids have been going abroad, choosing what seems to be better options. Help us with that.
Sure. So if you look at the study abroad market, I think on an average after COVID, it has grown by approximately around 20% every year, right? And pre-COVID, it was still growing, but the percentage of growth was much smaller, right? So probably around 10, 11%, but that has significantly increased to about 20%. Some of the factors driving that, one is a lot more students are going abroad for their undergrad studies, right? I mean, pre-COVID was mostly focused on postgrad, masters, but now a lot of students are going for their bachelors. Also, the geographies have expanded a lot, right? Typically, initially we used to only think about the US, UK to some extent, Canada. These days we have students going to places like Japan and Korea. I have had a student go to Israel. We have had students go to parts of continental Europe, Germany, Netherlands, Finland, etc. So the number of geographies are expanding, and what that has also meant is you have options available at different sort of price points in terms of what your tuition fees are going to be, right? So that has expanded the possibilities a lot. So I think these are some of the factors which are really driving study abroad. Also initially or sort of, if you look at 5 or 10 years ago, most of the students going abroad used to be engineers, right? Going abroad for their MS studies. That has also changed. I mean, we've had students go now for business and economics programs, yes, but also certain unique programs. Last year we had students go for programs like fashion journalism.
Wow.
We've had students go for, and this is probably the most unique student that we've worked with, for a program in manga art design. Right? So the student went to Japan. So, when the student came to us, the student had already been studying Japanese for a couple of years, right? So he was very focused in terms of what he wanted to do. But we had absolutely no idea about either studying in Japan or the manga art sort of industry, right? But we sort of worked with the student over a period of almost 18 months or so.
Wow.
And going through that entire process, we realized that manga art or anime is a $50 billion industry worldwide, right? And it's phenomenal. So I think today there's a lot more variation in what students want to study, and also a lot more variation in terms of the choices available, where students can make a very successful and viable career, because there is no limit to what you can do in pretty much any industry these days.
Yeah, and I guess it comes at a cost, which is why the education loan is a very important component of the entire process and probably central to getting that degree, whether it's undergrad or whether it's postgrad. Let's start with the process. So, at what point of time does a student or a parent actually start considering or should start considering about an education loan?
So, I think it's important to understand what some of the requirements of an education loan are, right? So that will sort of, if we backtrack to that will help us understand the process and at what time you should really start. So typically, while a student is the primary borrower in an education loan, the parent would usually be the co-borrower, right? So essentially, the loan is granted on the basis of the parent's sort of financial background, his or her credit score, etc., right? We see a lot of times there are certain issues in CIBIL score and things like that, which create a big problem, and the application is really a non-starter, right? So in terms of when you are planning for your child's education, I think you need to start maybe even 5, 6, 7 years before, making sure that your credit score is not affected in any way. Because if any impact on the credit score tends to stay for a long period of time. So I think that's very important in terms of planning. In terms of the actual application itself, most of the lenders are not going to process the application before they know which country and which university you're going to, right? So typically after you have applied to universities and you've got a good sense of the kind of universities you've applied to, it makes sense to apply to a student loan. At that point of time, a lender would be able to conditionally approve your loan because your admission is still not finalized, but at least you know which universities you are applying for. Some of the factors that lenders look at, obviously they would look at the student's background. They would look at what kind of grades the student has got, what kind of universities the student is applying to, what kind of countries the student is applying to. But they would also look at, from a parent's perspective, their financial background. Right? So we spoke about CIBIL score, but also the parents' sort of income, their existing loans and things like that. Factors that a bank would consider for granting any loan. Typical loan.
Basically, right? The ability to repay.
Right? And in India, the context is still that banks look at the parent's ability to repay and not really the child's sort of future growth potential and the future earning potential and the ability to pay from that, right? So it's still focused more on the parent's ability to repay.
Yeah. I want to ask about unsecured and secured. So are both options there, or is this कि भाई जो बोलते हैं कि घर गिरवी रखना पड़ता है, ऐसा कुछ?
No, there are secured and unsecured options both. The public sector banks generally do secured loans. They do have a mandate to do unsecured loans up to 7.5 lakhs, but anything more than 7.5 lakhs has to be secured. Private sector banks and some of these NBFCs which focus now only on student loans do unsecured loans for master's programs, right? So when it comes to bachelor's, pretty much unless you're looking for a loan which is less than 7.5 lakhs, your options are going to be with security. Right? So you're going to have some property, etc., which is given as security. But for masters, there are plenty of options available for unsecured loans. Again, the amount of loan that you can get without a security varies from country to country. It's usually the highest for the US, you can get up to 50 or 60 lakhs. Most other countries, between 25 to 30 lakhs is what you can get without security.
Very interesting. So you think of the lending, the education loans of masters is a little bit easier than what you have for undergrad.
Yes, predominantly because of the requirement of, or not having the requirement of needing a security.
Yeah, and with the masters, the repayment capacity also goes up.
Generally, yes. But again, unfortunately, when it comes to Indian banks, they still look at your parents' repaying ability rather than the students' repaying ability.
And just maybe our listeners or our audience is wondering, what is the loan to value? Like if I have a 10 lakh loan that I need, what's the value of collateral or security that I need to give?
So varies a little bit from lender to lender, but generally 100%.
Okay.
Right.
Okay.
So most, especially if you look at all the PSU banks, which are the largest sort of student loan lenders, it is 100%.
Sure. How does an education loan get granted, and is it, or rather disbursed? Let's say, like you said, we started with application for the loan. Once you give the application to your university for your course, you also apply for a loan. The loan gets granted, or the loan gets approved. How does it get disbursed? Do I get the entire amount upfront, or do I get it year after year after year?
So I think this is where education loan differs from most other loan products. Right? Most other loan products are single disbursal products. Well, not always, but in most cases. With an education loan, typically your education happens over a period of anywhere between 2 to 4 years. Your payment to the university and also your expenses do not happen all at one point of time, right? So you pay to the university every semester or every year. So the typical disbursal of an education loan is in line with the payment schedule that you have with your university, right? So pretty much every semester, which would be twice in a year, the bank would disburse what you need for that particular semester.
Okay, very interesting. What are the interest rates, the tenures, and the processing fees here?
Okay. Interest rates would generally vary depending on whether it's a secured loan or an unsecured loan. If it's a secured loan from a PSU bank, interest rates tend to be around 9.5% to 10% currently. Girl students get a 0.5% reduction in interest rates because of a central government policy. For unsecured loans with private banks or NBFCs, the interest rates range from about 11% to about 13%, depending on the university, the country, etc., that the student is going to.
Yeah. So what do you really advise? Because there's a whole range of interest rates out there, a whole range of lenders out there, starting from public sector banks to private sector banks and NBFCs. I'm assuming that that's the spectrum. NBFCs would be willing to give a loan to someone that maybe the public sector banks are not. So have I got that right? And how does that spectrum work? Like, where are the public sector banks, where are the private sector banks, and where are the NBFCs?
So let's sort of combine the private sector into one bucket and the public sector banks into the second bucket. So public sector banks, the advantage is that they offer the lowest rates of interest, right? The challenge is they do not offer loans without collateral, right? So for someone who has collateral available and who has no real challenges as far as their credit scores, etc., are concerned, a public sector bank makes the most sense because low processing fees, low interest rates, and then typically the highest tenures and the highest moratorium periods, right? So you can start repaying the loan much later. Wherever there is a challenge with any one of these factors, right, it makes a lot more sense to go with a private bank or a NBFC where you'll have much better chance of getting your loan approved, though it comes at a slightly higher interest rate.
Okay. What is the user experience, so to say? They call it UX, UI, whatever. I mean, how is that experience for me taking a lot? Dar bhatakna padta hai ki smooth hai?
I think with private sector, it's relatively smooth. With the public sector, your experience can vary depending on which branch and also which bank you go to. In general, if you're going to a larger public sector bank, especially SBI and Bank of Baroda, and you go to a branch which has a good understanding of the student loan product, I don't think it will be too much of a challenge.
Okay.
In terms of process. In terms of documentation, yes, obviously a public sector bank has much more requirements, many more boxes to tick. But as long as everything is in order, you should not have too much of a problem getting it done even with a public sector bank.
Okay. What all does a loan cover? Is it only education fee? Is it much more than that? Or what are the options?
So there is a concept called cost of attendance, right? So cost of attendance typically includes the tuition fee, of course.
Yeah.
It also includes your living expenses, your rent, your usual sort of day-to-day commute, food, etc. Your insurance costs. Typically, you'll need health insurance in the country that you're going to. And also your sort of airfare and travel cost of going and coming back from that country. Some loans also include things like your first laptop, and some other initial startup costs that you need before you start your program.
Not for the parents' airfare, right? When they go to visit.
No, I'm not aware of any loan which covers that.
Okay. Now the most important part, how does repayment work? And if you can help us for both undergrad and postgrad.
Usually what we see is there are 3 repayment options that are available, right? The first and the one that is used the most is what we call a full moratorium.
Okay.
Under a full moratorium, till the student is studying and for a certain period of time after that, usually between 6 months to 12 months after that, you don't make any repayments at all.
Okay.
Right? Which is, you don't even pay the interest amount every month. This option is usually offered by the public sector banks, right? And is offered whether it is for a bachelor's program or for a master's program. So for a bachelor's program, that would mean that you will not have to make any repayment for the 4 years of the program, plus period, 6 to 12 months after that.
Almost 5 years.
Almost 5 years.
Wow.
Right?
Okay.
I mean, the flip side to that, of course, is it's not an interest-free period.
Yeah.
Right? The interest still sort of keeps on accumulating. They don't compound it every year. It's like a one-time capitalization that happens at the end of the moratorium period.
Sure.
So that's option number 1, only offered by PSU banks. The second option is called interest only, right? Which means during the period of your education and the 6 to 12 months after that, you only service the interest amount every month, right? So you don't keep on paying the so it's not a full EMI payment, it's a interest only payment, and your full EMIs start after that period of time.
Okay.
The third option is you start your payments immediately, right? So your full EMI starts immediately. Obviously from a total cost of servicing the loan, The third option is the best because you end up paying the lowest amount of interest because you're starting your principal payments right from day one. But from a cash flow perspective, the first option is the best because it almost gives you an ability gives the student an ability to repay the entire loan himself or herself through the earnings that they have after their education.
But the most important part is it's not free money.
It's not free money.
You have to pay interest.
Yes.
It's not an interest-free loan, like you said, whether it is for 2 years or even 5 years.
Absolutely. There is no interest. I mean, whatever way the sort of loan is packaged, the fact is it is accruing interest, even if you are not making a payment at this point of time.
Yeah. The next obvious question that happens is on both extremes of the repayment spectrum. First is prepayment. So is that possible? Does it come at a cost? Does it come at a charge?
There is no charge. There are some banks which have some sort of a period during which you cannot make the prepayment, usually a year or two.
Sure.
But as long as you are not within that period, you can make a prepayment at any point of time.
Okay. And default, of course, of all the loans, this is one loan that you do not want to default on, but just in case.
Yeah, so I think, look, when it comes to a default, right, apart from the legal implications, the most significant implication is that your credit score and your credit history is going to get impacted, not just for the student, but also for the parent who is a co-borrower. And that's going to have an impact on any future loan that you want to
always
take, right?
Yeah.
So that's a major challenge. Apart from that, the banks, if it's a secured loan, will have the ability, though the process is long, but they'll have the ability to sort of
liquidate
the asset and recover the loan to the extent possible.
Yeah.
There are some banks, in fact, many of the NBFCs also, which are now insisting on a life insurance policy which is taken on the life of the student in favor of the lender. So in case the default is because of some unfortunate event happening with the student, it is something which is not going to impact, at least financially, the parent, because the insurance policy is going to take care of the repayment.
I think that's usual for home loans also, from what I remember. And of course, one more question would be that, is it possible for me to transfer my loan from one to another? Because let's say that even for a 2-year loan, or more so for a 4-year loan, interest rates go up and down. Like right now, we're at the peak of interest rate. People are saying that it will go down. Can you do what a lot of people do in home loan, which is transfer from one to the other?
A balance transfer is possible with student loans. Again, you would also need to transfer collateral, right? So as long as you're okay with that. Also, sometimes what happens is, let's say you've graduated and you're working and you have your own income, and as this of course assumes that you're working in India, you will actually be able to transfer your loan without having your parent as your co-borrower, because at that point of time your own income and your own credit score is sufficient to take care of the loan.
Now, your website is very interesting because it mentions a few categories that I haven't thought of, right? Because we spoke about co-signer, and there are a lot of other things that you can take your loan in USD also. So can you just help us understand these options?
So I think in the beginning I mentioned that when it comes to Indian lenders, because of the way our financial system, our banking system is structured, they really look at only your co-borrower's ability to repay the loan. What has happened over the last 5 or 6 years is there are certain lenders abroad which have sort of started taking a more holistic view of the future earning possibility of the student, right? To the extent where they've totally eliminated the requirement of having a co-signer or a co-borrower, right? So they have a list of universities and programs which they have themselves sort of analyzed, evaluated and assessed what the future earning potential after completion of that program is. And based on that, they grant a no collateral, no co-borrower kind of a loan to the student. Right?
Okay.
These lenders are predominantly in the US, lenders such as Empower, Prodigy, etc. They've been doing this for the last 5 or 6 years.
Sure.
The interest rates are still competitive when you compare it to Indian banks. However, these loans are denominated in US dollars. So if you actually look at the interest rate in that context, there is a significant risk premium that is attached to the interest rates. Right? I mean, if you're paying 12, 13, 14% interest rates in the US, that's not the same as paying 12, 13%. But it gives you an ability from a student's perspective to take the loan completely independently without the involvement of your parents. It also creates opportunities in case there are certain challenges in being able to take a loan in India because of either credit score related issues or collateral related issues. So I think from that perspective, these options are really good.
And what's better for the student? They're taking loan from here, taking loan from there?
Again, it's there is no blanket answer, right? It really depends from student to student. Now, if you have the possibility of taking a loan with collateral at an 8, 9, 10% interest rate from a bank in India, obviously makes a lot more sense than taking a loan at 12, 13%, right? However, majority of the students who are taking those loans really do not have that possibility, right? So the collateral is not available, or there's some challenges with the parents' credit score, etc. Or because of some other reasons, they're unable to take a loan from a bank, right? So usually, sure, if you had the possibility, it's much better to take a loan from India at a lower interest rate. But this is a great backup option where you don't have to compromise on your sort of aspirations and goals only because that possibility does not exist.
Yeah. And going with the theme, the name of this show, Mind Your Karza, you have any tips or a checklist for our audience to how to manage this very important loan? Because if you're abroad, you would really want at least someone, if not your parents, to take care of that loan. So for the students, for the parents, any checklist based on your experience with the children and the parents that you've handled, any areas to look out for or any habits of discipline that you can tell our audience?
Sure. I think like I referred to previously, planning finances for higher education needs to start a lot earlier than the education itself, right? So because higher education is expensive, it's expensive these days in India as well. So but abroad even more so. So you need to have clear sort of plans in terms of what your overall cost of higher education is going to be and how are you sort of working towards that goal over at least, I would say, a 5 to 10 year period before the cost actually has to be incurred. Right? I mean, you have to look at it as any other finance goal in your life, right? I mean, one of your goals could be buying a house. Similarly, this is a goal that you need to plan your finances for. Any financial plan typically does not have only one source of finance, right? So while a loan can be part of your plans, you cannot have 100% reliance on only a loan because there are lots of external factors that are sort of associated with a loan. Right? So you should always have a mix of your own sources of funds and a loan, at least when it comes to financial planning. The other thing to look at is obviously your credit score and credit history, like I mentioned, because if that is a problem later on, there are going to be challenges with getting a loan approved. And the third thing is your overall borrowing capacity, right? I mean, overall borrowing capacity is usually sort of determined by your income and your existing borrowings, right? Because how much more you can borrow depends both on your income, but also depends on your existing borrowings, right? So if you already have a large home loan, etc., which is taking care of or almost where your monthly EMIs are already at 30-40% of your existing income, that is going to make it challenging in terms of taking an additional loan. Third thing I think you need to look at is your collateral, right? Because like we said, especially for undergrad, if you're taking a loan in India, you are going to need collateral. There are certain kinds of collaterals which are accepted. Usually if it's a residential property, it's not a challenge. But with that also, there are certain complications, documentation related complications, right? Most banks will not give a loan unless the residential property has a OC, occupation certificate.
Correct.
Right? In Mumbai, there are lots of, Mumbai as an example, there are lots of properties which still don't have a OC, right? So that's a challenge. Most banks, especially the PSU banks, will not give or will not take an asset as a collateral if it is more than say 30 years old or more than 40 years old, right? So some of these things you need to be aware of and you need to sort of plan from the beginning because you don't want to realize these as challenges at the time of taking the loan.
Yeah, because the last thing you want is to mess around with a loan that is so important.
Correct.
It has to do with education of yourself or of your child. In general, what are the broad patterns that you've seen for funding of undergrad versus funding of postgrad? In the sense that for every 100 students going for a postgraduate course, how many take a loan and the same number for undergrad?
So I think for postgrad, I would put that percentage as high as 70 to 80%.
Okay.
Right, 70 to 80% of the students are taking a loan. When it comes to undergrad, I think the percentage is lower. I'd say anywhere between 40 to 50%.
Sure.
Because there is a difference in terms of demographics of an undergrad student versus a postgrad student. Because when it comes to undergrad, they're going for a program which is a much longer duration program. So it happens over 3 or 4 years, which also means that the total cost is much higher. Right? So typically a student going for their undergrad comes from a background where finances are a lot more sorted. Right? So the definitely lower sort of percentage of students taking a loan for their undergrad compared to masters. But we've also seen a change in trend over the last couple of years, where even if you have the ability to pay from a parent's perspective, they still want to combine their personal finances with a student loan.
Very interesting.
Not so much from a financing perspective, but more from the perspective of putting some amount of responsibility and seriousness on the child, because the child is aware that there is a loan which is being taken for the education, and it is the responsibility of the child or the student to repay that loan over a period of time. I think that brings a little more responsibility and a little more seriousness into the entire sort of education.
It's a very interesting parenting tip out there, as well as giving discipline along with debt. Okay. And that is it. That is a wrap on this episode of Mind Your Karza. My guest, Gautam Gadgil, founder and CEO of Enrizon. Gautam, thank you so much for sharing your insights with our audience.
Thank you, Anupam.